Hi folks, welcome back. Time for our weekly outlook. Today on Sunday, due to some unforeseen circumstances yesterday. With that, we shall look into markets, check out what goes, and where the US dollar might head to. In this case, we have potential news this week. There are not many news brewing, but most and foremost, obviously, the European Central Bank is going to kick in and to follow potentially with also further rate adjustments. Let's step backwards for a second and see what happened this past week. Non-farm payroll data, 142,000 new created jobs, worse than expected. The figure of 176 was not happening, basically market moving lower. The US dollar in general obviously kind of causing a setback. With that, we shall look into what happened on this Friday with the US dollar. The euro has started to appreciate actually, but figures were not strong enough. And is that now dollar weakness due to weaker figures in the US, or resuming dollar strength because of weaker figures? We have this and have had this quite a few times in the past, that the dollar turned up some sort of stronger momentum when figures in the US were not positive, and that's at the moment what might be the outcome here, based on numbers from Friday. So with that said, we could see that potentially the recent market motivation and the recent resistance area started to fall or to fade on Friday. However, the figures were interpreted differently, and this could give us opportunities towards the 50 moving average. If the low, the 110.30 area being broken, the euro dollar could weaken towards the 50 moving average. This is here the extension I was writing in, potentially causing downside motivation in this market to continue, and the US dollar strength to basically resume upside momentum, indicating that the dollar might gear up some sort of strength, which is exactly as we see this market potentially unfolding as we speak, because obviously here the 100 area, that's the dollar index, the 100 psychological support area might last, and this could cause the US dollar to gear up some sort of motivation here. With that, we could see that the dollar index could gear up steam, basically the inverse correlation we have with the euro US dollar currency pair to begin with. What else is brewing? We have the pound causing similar market motivation, as we see the pound not able to gear up steam on the back of these non-farm payroll news on Friday. The Australian dollar, similar story, and the Aussie is obviously kind of giving us a bit of a potentially strong preview what we might expect. Now, the Australian dollar had long been rather stronger comparing the Aussie with the euro and with the pound. However, the recent resistance area was actually not being broken, and this translates to potentially further weakness right now, and this might be the preview to what we see in equities. If the Australian dollar weakens, equity markets might fade, and the entire risk sentiment might cause some sort of basic negative market sentiment here. Looking at it from the long-term perspective, though, the market is still and remains in positive motivation. We could see that there is still upside momentum here if at least the technical pattern, the 67, 80, 68 zone, the resistance, the upcoming resistance areas being broken, the market might appreciate further. If the market is not breaking these high points, the market might start to fall again towards lower prices, causing up obviously kind of some downside momentum, downside motivation here to continue. That's at least what the Australian dollar might show us, and that's how the Aussie, and why the Aussie is kind of currently in a negative way and offering a negative sentiment. Now, towards the equity market, as we started talking in a minute ago, the S&P weaker, right? So negative sentiment, worries for the economy. That's headlines we saw as well from Bloomberg, just browsing over. Risk momentum is obviously getting a bit hammered to the opposite side, and that's not only in the S&P 500. We have similar stories when looking at the Dow Jones. Currently at the 50 moving average, which could hold the market up from falling somehow further. However, the NASDAQ, this doesn't really look any bullish or any more in bullish territory here. The market is just now, as we speak, at this 18,400 level that was a resistance area in the past. This was acting as support, and the question is now whether this market is just acting again as support here in the next week, in the following week. But it looks like at the moment that the risk sentiment, and let us reduce and remove all trend lines, the risk sentiment is just now not really looking any sweeter, and the market might, if we ignore the long wick from this big sell-off on that recent Monday, if the market is just maybe ignoring this area here and will just start to fade off the cliff and starts to weaken actually anytime potentially soon. So figures and what's up this next week now. We have the European Central Bank, and that's on Thursday, the monetary policy statement. Will we see a rate reduction? The European Central Bank had already started to depreciate and cut rates already in the past. There could be chances of another rate cut coming. I might say there's pretty high chances, and I might say as well, if we see a 50 basis point rate cut, this could be something which is not slashing the euro, hammering the euro to the downside, but this could be a reason causing the euro to at least correct somehow further. Bringing us to the point that now we have the numbers from the US, economic worries being somehow negative, the US dollar appreciating due to those negative figures. And if we now see that the Eurozone is going to cut rates somehow, not the Eurozone, that's not possible, but the ECB is cutting rates, we could quickly see that the euro basically celebrates this strong technical resistance area, not the perfect black trend line, but basically this entire resistance zone we see here, and causing the market momentum to weaken. Let's take this long old arrow from that higher area and see whether this is going to be the case. Downside motivation, obviously as well, looking at rate differentials would cause less attractiveness, or would basically cause the euro to weaken due to less attractiveness from the interest rate differential, which is still obviously higher in the US dollar. So the dollar might appreciate and the euro could weaken somehow. Those are basically the biggest figures we receive this week. Friday, nothing on the major news. On Wednesday, we have CPI data, and they were long the strong basic setback for the Federal Reserve, right? So now market motivation had gotten away from consumer prices, from price developments, from the recent inflation story, back to employment figures. And the CPI data, not a big change expected. On the annual side here, we see that figures are expected to basically weaken down from 2.9 to 2.6%. However, on a monthly basis, no change at the moment expected. Obviously, any sort of deviation from the expected, any deviation from the mean, could cause the US dollar to strengthen or weaken, depending on how big market participants are going to look into those figures. But volatility expected on Wednesday, which, by the way, as well from the GDP side here in the UK, could be interesting. Now, GDP figures, gross domestic figures, GDP is basically a backward-looking indicator. So that might not give too much of forward-looking input, and offer not too much for that matter. But it could be something interesting here for markets which are due on Wednesday. And now, looking at the UK again here, claimant count changed. So how many new jobs are created is one thing, but how many people are basically applying for unemployment support, right? So the people claiming claims, the unemployment claims are kind of quite important, and they might gear up market motivation as well. So we shall look into those figures here on Tuesday, as usual, early morning on Tuesday, and they might give us input into market momentum. Back to the charts, the euro we checked, the pound we checked, the Aussie we checked. What is the Japanese yen doing? Well, secretly actually it had moved a lot again and appreciated again. And by the way, the US dollar against the Japanese yen used to be the biggest moving currency pair when non-farm payroll figures were released. We might say this week there was quite a similarly big story, and we might say as well that now it's time to basically clear some and draw some annotations here in this market. The non-farm payroll figures are basically one thing with this currency pair, but technical indicators are another. Basically, we see that the rising trend line, the 50 moving average, had started fairly recently to kind of bend to the downside, and that's exactly how the market is going to potentially give us a bit of a stronger resistance area first of all, but also the market driving away of this zone. Now, this 50 moving average is not likely to change a lot depending on how the figures and the candlesticks are moving within the next couple of weeks here for now. But one thing which is interesting is the support area, and this support zone has obviously kind of been crossed. The basic supportive line, pin bar candlestick, upside potential, not happening. Pin bar candlestick now being seemingly crossed to the downside, at least we are very close by. There's not much support left. We are talking 141, say 50, and this area, if it's being broken, could unleash further downside motivation, and this area basically might cause the market momentum to basically weaken anytime soon, trading and translating to downside motivation here potentially soon as well. Should the lows be broken, downside momentum could happen. And that's not only the case in the US dollar against the Japanese yen, no way. It's being seen again as well in other currency pairs. And with that, we can see that all these currencies that all the currency pairs are basically clearing their momentum, and the pound JP pushing itself to the downside. The euro Japanese yen as well on the weekly chart had already kind of started to depreciate. So Japanese yen strength potentially unfolding. Yes, the economic situation globally not really looking very promising, and well, there is a chance and the situation, or basically a strong reason why the Federal Reserve, among other central banks, are already starting to depreciate or adjust and cut rates to the downside due to those negatively mentioned impact. The oil market giving us another reason to believe that something rather negative is kind of around the corner, as obviously the support zone here, light blue color, has been broken, and oil, which looked like, okay, is it going to rise? Yes. Is it going to fall? Yes. Can rise again? No. And there we go, back and forth. The market momentum, however we look at it, or no matter how we look at it, triangle formation has been broken, and that usually leads towards a breakout into one direction or the other with generally bigger magnitude. Does this mean oil is now going to weaken even further with stronger momentum? Potentially, right? We've seen stronger falling prices in the past. Let's look back towards the COVID times, when basically the demand for oil, since everybody stayed at home, was near nothing. Oil prices basically here were when people were actually about to not kind of extend their future contracts basically to the downside, even into negative territory back then. But at the moment, what we can see is technical indicators, the 50 moving average being broken, so triangle formation broken to the downside, 50 moving average broken to the downside, demand side not really looking good. A forecast, or basically OPEC Plus, stating they will increase output numbers gradually as well towards their 180,000 barrels a day, not by 180,000 barrels a day. So there is further reasoning to believe that also from the fundamental side here, the supply side is going to be increased somewhat, but the demand side, well, if it's remaining the same, we shall see as well how prices might be able to develop. At the moment, at least, they look like they will be lowering the momentum here, and the prices are going to weaken somehow further. Last but not least, before we go to cryptos, the silver and gold markets are not really doing anything much in a positive matter. So silver back to slightly lower areas, and all these markets on Friday were quite strongly impacted by one thing, obviously the non-farm payroll figures, and with that we can see that simply silver is currently about to weaken further. The support area here and the last week's basic supportive range is about to be threatened again. We have this area here, let me mark this in, which lasts and acts as a bit of a support, resistance, support here. If this area has been broken, so basically 2750, if that area falls, we might see the market is basically about ready to break to lower price areas, and gold similarly behaving. However, gold still looks like it's back on track towards bullish market motivation, and why should it not be? If we see worries on the economy, if we see equities turning to the downside, the demand in silver, economic metal, right? So a metal which is not only a precious metal but obviously also an industrial metal, silver demand might actually weaken. However, if traders shift their portfolios away from the equity market, silver might weaken, but gold might get another push in demand, which is why at the moment it might be just time, or might be just a matter of hours, days or weeks, at least in the short term, that the gold price could express a further positive sentiment, further positive motivation. We are close by the psychological 2,500 and above zone, which when broken to the upside, it could cause upside motivation to potentially increase again quite a fair bit. So gold looking positive as the market looks like, and it's not really impacted much by the dollar motivation for now. Now the crypto world not doing anything much here in a positive way as well. So the Bitcoin is at the moment right on top of the 50 moving average. It started to appreciate a bit over the weekend. Downside momentum on Friday, obviously stronger dollar, and nobody can tell me right now that stock markets behave different from cryptos, or say cryptos are not following the risk sentiment. My goodness, obviously they do follow the same situation, the Bitcoin weakening alongside. So there might be some retracement to higher levels before the market actually weakens. We'll look into Ether in a minute, but here it looks like the the sideways trend, the slightly weakening trend, might be due to continue, at least at the moment. Bitcoin looking kind of quite bad, and there we go with this chart. We are kind of quite far away looking at it with Ether, and that's the ETH downtrend, which wherever the market weakened, we saw a bit of a retracement and now weakening momentum, and now it might be ready, or the market might be ready for a bit of a retracement. However, if this lasts and causes the market momentum to cause upside momentum, might be a big question. Ether, by the way, anyways, looks quite weak, though we are not far off from a psychological and technical support 2,000, the round number. Let me mark in this zone here straight, because the 2K area is quite an important one, and this area is not far off here. We are not far off that zone. If the market falls again towards this area here, we might see buyers stepping in to cause the price to increase a little bit. For those hodlers, this zone 2,000 might be a long-term support, a long-term precious support, potentially being able to appreciate or causing market prices to appreciate medium term. So something worth taking a look at here into the market as well when looking into further market momentum and further market sentiment here in the crypto market. So the bottom line this week, on Thursday, we got the European Central Bank. We got some figures from the US in regards to consumer prices, not really important. ECB is going to be the big driver in market motivation. That's the at least big likelihood, which remains to be seen anytime soon. Apart from this, we saw that the weaker NFP data, obviously kind of as expected by traders, that economic figures showing that there's a slowdown in employment, which is now giving the Federal Reserve, I think it's about next or the week after, with their interest rate decision they are due, to give them a lot of reason to basically cut rates as well. Will the European Central Bank go one step further? I might say yes, potentially not by 50 basis points, but 25. So there could be something interesting and some volatility to be seen. Guys, happy trading. I wish you a happy trading week. Talk to you soon. See you then. Ciao, ciao.